In a rapidly shifting financial landscape, Bitcoin's volatility and regulatory actions surrounding stablecoins are capturing global attention. Meanwhile, emerging infrastructures like Hyperliquid are gaining traction. Here are today's top 10 stories you need to know. In the cryptocurrency market, a significant transfer of 200 million SDS has recently taken place, drawing attention to the cautious sentiment among large holders. This transfer, valued at approximately $220 million, was moved to a known wallet associated with the prominent figure Justin Sun. Whale transfers often signal shifts in liquidity and positioning, reflecting broader market sentiment. Such movements can either indicate strategic accumulation or the reallocation of assets, which can influence market dynamics. The presence of large transfers like this tends to reinforce a cautious mood as traders become more aware of potential volatility and market corrections. As such, understanding the motivations behind these whale transactions is crucial for market participants. They often reflect broader strategies that can affect liquidity across the cryptocurrency space. In light of these developments, traders are advised to monitor whale activity closely as it can serve as a bellwether for market trends. Moving forward, analysts will keep a keen eye on similar large-scale transactions as they navigate the complex terrain of cryptocurrency investments. TRON remains a key player in the cryptocurrency ecosystem, primarily due to its high activity in stablecoin transfers. This focus on stablecoin transactions positions TRON as a crucial payment and settlement network within the crypto economy. While it may not be the most talked about asset at any given moment, its importance cannot be overstated. Stablecoins are gaining traction as they offer lower volatility and better liquidity management, making them attractive for traders seeking to minimize risk. The sustained activity on TRON underscores its relevance, especially during periods of market uncertainty. Moreover, this activity highlights the growing integration of stablecoins into various financial systems, leading to increased adoption and usage. As TRON continues to facilitate stablecoin transfers, its role as a backbone of the cryptocurrency market is solidified. Investors and traders should keep an eye on TRON as it may offer insights into broader market trends. In the coming weeks, further developments in TRON's ecosystem could enhance its standing amid shifting investor sentiment. Solana remains in the spotlight as a high-performance blockchain ecosystem, garnering attention from institutional and retail investors alike. Despite the absence of a standout headline, its positioning alongside major cryptocurrencies like Bitcoin and Ethereum underscores its significance. Solana's architecture allows for rapid transactions and scalability, making it appealing for decentralized applications and trading platforms. The integration of Solana within the broader cryptocurrency market signals its enduring relevance amid fluctuating investor sentiment. As capital rotates toward high-throughput solutions, Solana's infrastructure continues to attract interest from developers and users seeking efficient blockchain solutions. Observers note that Solana often benefits from increased capital inflows during periods of market consolidation. This positions the network as a likely beneficiary of renewed interest in high-performance applications. Looking ahead, further developments within the Solana ecosystem may enhance its appeal, leading to greater adoption and usage. Investors should stay alert for potential partnerships and technological advancements that could solidify Solana's position in the market. In recent trading sessions, Binance Coin, or BNB, has demonstrated notable relative strength, surpassing the 670 UST mark with a daily increase of more than 5%. This upward movement positions BNB as one of the stronger performers among large-cap cryptocurrencies. The performance of exchange tokens like BNB often reflects both ecosystem demand and a broader risk-on rotation within the altcoin market. As investors seek opportunities beyond Bitcoin and Ethereum, BNB's strength indicates a shifting sentiment, with traders becoming more willing to embrace riskier assets. The growth of BNB may also signal increasing confidence in the Binance ecosystem, which continues to expand its suite of services and products. Moreover, Binance's continued commitment to regulatory compliance and user security may enhance trust among its user base. As BNB's price continues to rise, it is essential for market participants to gauge the sustainability of this momentum. Analysts will be watching closely to determine if BNB can maintain its current trajectory or if external factors will lead to a correction. In the coming days, developments within the Binance platform could further impact BNB's performance. Hyperliquid is making headlines as a significant player in the cryptocurrency infrastructure space, showing impressive growth in market capitalization. The project has rapidly gained attention among traders and investors who are increasingly re-rating its potential. Hyperliquid's emergence signifies a shift in how market participants view new on-chain trading platforms, particularly during times of consolidation among larger assets. Its innovative approach to liquidity provision and trading mechanisms is attracting users seeking more efficient avenues for trading. As traders look for alternatives to traditional exchanges, platforms like Hyperliquid become essential in shaping the future of cryptocurrency trading. This trend may lead to a diversification of trading strategies, with capital being allocated toward platforms that offer unique value propositions. The rise of Hyperliquid also highlights the ongoing evolution of the cryptocurrency landscape as new technologies and solutions continue to disrupt existing norms. As this project gains traction, its impact on the market will become increasingly relevant. Analysts will be monitoring Hyperliquid's developments closely to assess its long-term viability and influence. USDC is currently under regulatory scrutiny following a court order that instructed Circle to block certain funds linked to a disputed wallet. This freeze order impacts more than just the immediate financial implications. It raises critical questions about the operational risks and compliance issues facing stablecoin issuers. As legal disputes emerge, stablecoin operators like Circle find themselves balancing the need for regulatory compliance with the principle of censorship resistance. The case highlights the complex relationship between stablecoins and regulatory bodies as governments seek to maintain oversight while innovation continues to thrive. With stablecoins becoming increasingly integral to the cryptocurrency ecosystem, the outcomes of such disputes could set important precedents for the industry. Investors are advised to remain vigilant as these developments unfold, as they could influence the broader market sentiment surrounding stablecoins. As regulatory frameworks evolve, the future of USDC and other similar assets will likely hinge on how they navigate these challenges. In the coming weeks, further clarity on this case could lead to significant shifts in market dynamics. Recent market trends indicate that stablecoins are becoming a core allocation theme among cryptocurrency investors. As risk appetite declines due to economic uncertainty and regulatory scrutiny, traders are increasingly seeking lower volatility options for their portfolios. This shift highlights a movement from speculative assets toward dollar-pegged cryptocurrencies, which offer better liquidity management and capital preservation. Stablecoins are essential in providing stability during turbulent market conditions, allowing investors to navigate fluctuations without exiting the crypto space altogether. The growing focus on stablecoins signals a strategic pivot among traders as they prioritize utility and settlement infrastructure over high-risk speculation. This trend has the potential to enhance the overall functionality of the cryptocurrency ecosystem, fostering greater trust and participation from institutional investors. As the market evolves, the demand for stablecoins may continue to rise, potentially leading to new innovations and products within this segment. Looking ahead, the increased adoption of stablecoins could fundamentally reshape how digital assets are traded and utilized across various platforms, paving the way for more robust financial solutions. XRP has emerged as one of the few large-cap cryptocurrencies witnessing positive demand for its ETFs. On May 29th, U.S.-listed spot XRP ETFs attracted nearly $11.88 million in net inflows, contrasting sharply with the outflows seen in Bitcoin and Ethereum ETFs. This trend reflects a growing interest in XRP as a regulated product, suggesting that investors are rotating their focus toward assets with clearer regulatory frameworks. The inflow of capital into XRP ETFs indicates a significant shift in market sentiment, as investors seek stability amid broader economic uncertainty and regulatory scrutiny. As more traders recognize the potential of XRP, particularly following recent legal developments surrounding its status, it may pave the way for increased institutional adoption and usage. This performance could act as a bellwether for other cryptocurrencies seeking similar regulatory clarity and legitimacy. Analysts believe that sustained inflows into XRP ETFs might not only bolster XRP's market position, but also influence the broader cryptocurrency market's direction. In the coming weeks, ongoing interest in XRP could solidify its role as a leading asset in the evolving digital asset landscape. Ethereum ETFs are currently experiencing significant outflows, marking a concerning trend for the overall market. Over the past 13 consecutive days, these ETFs have seen cumulative losses amounting to approximately $694 million. This persistent redemption pressure suggests that institutions are reassessing their exposure to Ethereum, which remains integral to decentralized finance and tokenization narratives. The outflows come amid a backdrop of rising interest rates and inflationary concerns, which have led to a more cautious approach among institutional investors. As Ethereum is often viewed as a bellwether for the broader cryptocurrency market, these trends indicate a potential shift in sentiment regarding large-cap risk assets. The ongoing outflows reflect apprehension about macroeconomic factors and geopolitical tensions, which have clouded market stability. The sustained pressure on Ethereum ETFs may lead to increased volatility, impacting not just Ethereum's price, but also the overall cryptocurrency ecosystem. Analysts anticipate that if outflows persist, it could prompt further price corrections. However, should institutions find renewed confidence in Ethereum's underlying technology and its role in Web3 development, a rebound could be on the horizon. Investors will need to stay vigilant as this situation unfolds, particularly in the context of upcoming regulatory developments. Bitcoin remains the benchmark asset for cryptocurrency sentiment, but recent developments indicate it is under pressure from ETF outflows and a declining risk appetite among investors. As of late May, Bitcoin's price was reported at around $73,105.71, experiencing day-over-day declines. On May 30th, Bitcoin managed to push back above $74,000 intraday, highlighting a volatile and range-bound market. This fluctuation reflects the broader market's reassessment of Bitcoin through the lens of macroeconomic risks and geopolitical tensions. The recent tightening of monetary policy and rising inflation have led to increased investor caution, particularly in high-risk assets like cryptocurrencies. As the primary liquidity magnet in the crypto space, Bitcoin's ETF flow direction often serves as a proxy for overall crypto risk appetite. The current pressures suggest that investors are becoming increasingly wary of large-cap assets, which could signal a shift in market dynamics. Market analysts will continue to monitor these trends closely, as Bitcoin's performance can significantly influence the broader cryptocurrency landscape. The coming weeks will be crucial for Bitcoin's price action, as any significant changes in sentiment could lead to further volatility. With ongoing macroeconomic challenges and investor uncertainty, the focus will be on how Bitcoin navigates these pressures and whether it can regain upward momentum in the face of adversity. Thank you for joining us today. Which story surprised you the most? Let us know in the comments, and don't forget to like and subscribe for more updates.